guys, welcome back to my channel. It's Maria if you're new here, and for today's video I'm going to be talking about my first impressions on the stock market. I just invested $200 in stock through Robinhood, so I'm going to be just kind of talking about that process with you guys in case you guys are thinking about maybe investing in the stock market yourself. So basically during quarantine I've had a lot of time to think about my finances and how I want to grow within my finances. The first thing I told myself I was doing out of school was going to set up a savings account and sort of build up my finances, but I went through a lot of savings accounts. The problem with a lot of them is interest rates are so low. You always wonder, like, if I'm putting a ton of money towards something, is there anywhere else where you could expect more money? I kind of talked to my mom because a few of my teachers had always said if you invest in the stock market, you're gonna have way better of a return putting your money into a bank account or a savings account or something like that where the interest rates are just super low. So I took the leap and I decided to invest the $200 into the stock market through Robinhood. So this is about a month ago. So now that I've done this, I'm gonna kind of go through some things that I discovered along the way for beginners if you're thinking about doing this too. So the first thing you may be asking, it's worth it. So I am a 21-year-old. I am not an expert in the stock market at all, but I've heard from a lot of people that they feel it is worth it. I basically just invested in companies that look good. I researched them for about 5 minutes and I was like, all right, that sounds great. Yeah, I'll do that. So I didn't really do any extensive research before investing in the stock market. I just didn't find a lot of stuff. So I tried to look for like 2 websites that had like kind of mutual idea on what markets were going to be the best, especially for like cheaper stocks since I was just getting into it. I did see for one of the stocks, 2 websites had said good things about it, so I was like, whatever, I'll just take the leap and I will buy this one. And then I decided to buy a share of Disney. Disney's very stable, so I was like, okay, I'll just do this to kind of like, you know, maintain stability. So basically, here's what my opinion is. It could go either way. I think that there's a lot of room for growth because for some of them you're getting dividends, which is what the particular company will pay you every few months to kind of like say, you know, thank you for investing in us. That's definitely a perk, and I really do like that perk because it's kind of in a way like your interest because you're getting money for staying loyal to that stock, just like you would be if you were staying loyal to a bank over time and saving a lot of money with them. But another thing I've found as well is that if your stock is doing really, really well, then you can either hold on to it and see if it gets better, or you can sell it and make a profit that's way larger than any amount of money you'd see in interest rates through your account. So I guess like to think of the stock market a little bit as gambling, but you're obviously going to have a better chance of performing well rather than like if you were just at a slot machine, because you can do all the research in the world to help you along the way. You gain a stronger portfolio. So it's like way better than just putting your money in a slot machine and going ham. It still is a gamble because you have no idea whether your stock is going to do well or you're going to lose money from your stock. It all has to do with the value that the stock is. So some people will see themselves start to lose money and they'll get out of it right away because they realize that they're going to lose a ton of money from this company. A good example of the stock market being a huge gamble is kind of what happened with the pandemic in a way. Before the pandemic, I'd like to say that the economy was doing pretty well. People were making money off their stocks. They were doing very well. Everyone thought that the stock market was going to stay well. I don't think anyone really sold anything. Like, people knew about the coronavirus, but they didn't like know how big of a deal it was. So they just kind of stayed with their stock. They didn't sell anything. Coronavirus hit and stocks just plummeted. They went way down. No one really expected this to happen. So this just proves that the stock market can be a gamble and you can either turn out very successful or unsuccessful depending on the moves that you make, and sometimes it is very much beyond your control. Another thing I've really realized through this journey of the stock market is that pretty much you should be investing in all different types of companies. For example, we'll say you were invested in all hotels. Most likely when a company is doing bad, then that industry itself may be doing really poorly. So if you invested in Marriott, you invested in IHG, you invested in Wynn, like you invested in 3 different hotel companies and then the hotel industry sucks, your entire portfolio is pretty much screwed because that entire industry is down, so you're most likely going to be losing a ton of money by doing this. Now, if you were to invest in, say, the tech industry, the medical industry, the hotel industry, all these different sorts of companies, then most likely some of them are going to do well. So even if one of them completely goes down, you will have those other types of companies as safety. Your entire portfolio isn't just going to like plummet to the ground. Like you're going to have some sort of stability within your portfolio if you choose different types of companies that aren't in the same industry with each other. The thing that I always wondered with the stock market is when you're really supposed to let go of a stock or sell it and make a good amount of profit out of it. That between 50 and 300 days are the times that people get the most return out of their stock, and it takes a lot of waiting. You're not going to see the money normally right away. I think that it's really important to just really research the industry you're in. If your stock is going up but it's predicted that it may go down in a few months or something, then you might want to consider selling, but I wouldn't do it until you've done a good amount of research. Also, if you just see that it's rising up and hitting a peak, I wouldn't wait too long before you sell it. I've seen so many people really lose money this way. If you just wait and wait and wait and wait for it to get higher, eventually it's going to go back down and it could really hurt you in the long run. Figuring out, okay, like I'm going to make a good amount of money of this, and looking at other companies you might be able to invest in that are more like rising and they're really like starting out and having a good rise through the stock market and stuff. So it's just important to like make sure that you're really thinking about, okay, I've already made a good amount of money from this stock, maybe it's time to get out of it before I lose all of that money that I've made. The stakes are really high when it's rising a lot, and then you decide to hold on to it hoping it'll get better, and then it plummets back down. You don't want to wait until it plummets back down. You want to get it sold before it reaches that peak where it just plummets down again. And then something else I want to go over in this video is how much I made so far, just like over the course of the month. So right now I'm just going to talk about the companies that I have for stocks so far. The first one that I invested in is Fueltech. This is the one that I did research for on different websites, and everyone was saying that this was a stock people should invest in now, and it's growing, so it is worth 77 cents now. People expect that to grow a lot over time. It's one of the ones that I invested in. It's doing pretty well so far. I hope that it just gets better over time. And then I invested in Disney because that's just a really stable stock. It was actually a little bit lower when I bought it because we were going through this pandemic, so like no company was really like doing well. So I bought it at that time, and I think I bought it for like $115 at the time, up by $1.13 today, so it's just kind of like staying stable, which is great. And then something else I did was I invested in Shell because I figured the stock price was really low for it because no one was going anywhere at the time I invested. So I was like, alright, I'll do that. So that one is actually up $2.20 today. So again, it's doing very, very well, which is great. Another one I invested in was McEwen Mining. I actually will probably get out of this one soon just because it's not doing too well. I had way higher expectations for it, and a lot of people were talking about this one. So that's why I invested in it, but I'm probably going to get out of it soon. It really hasn't been doing well. It's been going down a lot, so I will probably get out of it soon. I've had it for about a month and I haven't really seen anything out of it, so I will probably get out of that one fairly quickly. My grand total, basically I invested $200 in, and I'm at about $220 right now, so that's a $20 profit. And I know that doesn't seem like a lot, but also think about the fact that if I were to put that $200 in a savings account, I would probably have like $2 interest or something. Like, it wouldn't be a lot. So you always have to think about that. Your money may be better off in the stock market only because there's like basically no interest when you put it in a bank. Now, I'm not saying put all your money in the stock market because that would actually be a bad idea if the stock market were to crash and you were to lose all your money. But something that I am personally doing is basically whenever I get a paycheck, I plan on taking $50 and putting that in the stock market every month. So I know that doesn't seem like a lot, but over time this will help grow it, and I can put my money in savings for stability, but I can also have that money that I put in the stock market and really watch grow over time. So that's what I'm personally doing, and I've actually been pleasantly surprised with how the stock market has gone for me so far. I mean, that's $20 extra in my pocket, and I basically did nothing for it, just like held these stocks. So I have that extra money, which is nice, and I know that would have taken me forever to grow if I was just putting it in my savings account at my bank. So I'm actually surprised with how the stock market has gone for me so far, and I hope it continues to go well. But I have a great first impression for it so far, so if you guys are interested in that, then I definitely recommend doing that. Do some research first, but I have been very happy with how it's gone for me so far. That basically completes this video. I'm sorry I was kind of rambling about a lot of different things, but I just wanted to kind of tell you guys my feelings of how the stock market has gone for me so far, and kind of like my tips on getting into it and stuff like that. I hope you guys enjoyed this video. If you liked it, please give it a thumbs up and subscribe to my channel. See you tomorrow in my next video. Bye.